Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Do you see Mr. Northington? He's subscribed in style, and so can you. Subscribe in style with Morris Money. Today, I'm talking about the best strategy for your investments in 2023 to stop losing money. If you've been watching the channel for a minute now, you know that I'm a fan of American Rebel Holdings AREB. This company is one of the smallest market cap companies on the market, and I decided to invest in it, and I've been covering it on the channel for about a month or two now. I invested because the company is intrinsically undervalued. Off the third quarter earnings alone, they had revenues of $5 million with a current market cap of $3.8 million. It obviously makes clear sense why they're undervalued, but here's where the problem comes in. My position went from being up 20% to now down 20+% on the position. Why is this? Well, with penny stocks, stocks in general, and very speculative stocks right now, the goal is to buy the rumor and sell the news. Because once the news or PR is released, the stock crashes, and this was quite evident with AREB. In about a week span since the PR release, the stock has gone from being in the mid-30s to now down in the low 20s. Now, the stock definitely has potential, but the problem is people aren't sticking around for the long term. People are thriving off of speculation with stocks, especially stocks like these where they're low market cap or penny stocks. The goal is with these companies to invest off of speculation. AREB is a perfect example. The company is still intrinsically undervalued, but the stock is sold off, and I don't see it increasing in price until another PR or some news is released. The question becomes, how can you prevent this from happening to you? First, start with a plan. Always go into investment with having a plan, whether that's selling out a couple days before you think the news is going to be released, having a stop loss, or having a goal set for when you want to take profits. Second goes right in line with that last point. You need to know when to cut your losses and when to not be greedy. The thing with majority of these speculative stocks is we don't know how much they could increase or decrease. You shouldn't expect every stock you're investing in to double or triple your money. With a 20+% return on my investment, it might have been a good idea to sell out, but in the same note, you gotta know when to cut your losses. In this case, now I'm down 20+% on my investment. If there's another stock that you're looking to invest in, or a more productive way you can use this capital, it might just be a good idea to cut your losses, as there's no guarantee that these stocks can go back up to their previous prices, and they might keep decreasing on you, and your 20% loss could now potentially turn into a 50% loss. The last point is what I started off with. Buy the rumor and sell the news. Sometimes it's best to follow the crowd, and currently with speculative stocks like this, it seems that majority of investors are buying on speculation and selling once the speculation turns out to be correct. There's no reason to try to outsmart everybody. If this current method is working, follow along with that. If news is supposed to be released on Wednesday, sell the stock Monday and make sure that you secure those gains. Because if you have high conviction on the stock and you want to hold it long term or even medium term, the stock could sell off on Wednesday, and you can buy back in at a cheaper price after securing gains. Let me know what you think below about this quote-unquote investment strategy, and do you think it to be true? If you invest in speculative stocks, let me know your investment strategy down below. Please don't take this video as financial advice, and thank you for watching Morris Money.